Good afternoon to you, and of course, this is Ghana's leading business analysis show, Beyond the Numbers, and we're coming to you live from our studios here in Kokomlemle, Accra. Now, we get straight into the headlines moving the market, and today it's all about cocoa and the banks. So, cocoa first. Well, Ghana and Cote d'Ivoire together grow about 60% of the world's cocoa and have agreed to start harmonizing their farm gate prices. Well, President Mahama and President Ouattara signed off on it at a summit in Abidjan, the idea being to lift farmer incomes, cut out the cross-border competition, and give the two countries more muscle on the world market. And here's the interesting part. Even the global prices falling, even though it's falling, Cocoa Board is holding Ghana's price steady at 1,241 cedis 76 pesos per load, with the light crop buying starting tomorrow. So the question for us today, can these two finally set their own price, or are they just protecting farmers while the real power stays abroad? Then to the banks, and one of the longest running legal sagas from the sector cleanup may finally be winding down. The Court of Appeal has thrown out the receiver's stay application in the GN Savings and Loans case, clearing the way for the company to reopen almost 7 good years after losing its license. It follows that May ruling that quashed the 2019 revocation, and we're told reopening starts in phases from the old Elmina branch. Plenty to chew on there about the real cost of these banking reforms. Well, we'll get into all of that right here on Beyond the Numbers. I am Michelle Lejakum, and of course, Caleb is here on the smart wall, and Kofi Ejay. Good afternoon, guys.
Good afternoon, Michelle.
Yeah, it looks as though I'm not seeing you too. But it's a good day. We're in high spirit, Black Stars, we're going for it. We'll come to that. But first up, two big stories. Cocoa, Abidjan, Cote d'Ivoire, Ghana. We know that if together we're doing 60% of the global cocoa beans. Yeah. And historically, if you look at how we've come between Ghana and Cote d'Ivoire, even though both of us together are doing much percentage of what we produce, somewhere, somehow, we were competing. And this time around, we're saying, okay, no, let's harmonize. Is it to protect the farmers? And I'm sure a layman sitting somewhere would say, okay, so if Ghana and Ivory Coast together are producing almost 60% of what the world needs, why is someone somewhere in New York, London, determining the value of the cocoa that we're producing?
Well, I think these talks didn't just start this year. They've been there. I think in 2019 was when we saw a real agreement in terms of protecting farmers, where we introduced that $400 per bag in terms of the differentials in terms of the prices to actually protect farmers. And so if you look at the two countries, the reason why at a point it became difficult for us to sort of have one price or a harmonized prices, there are so many factors that makes the harmonized price a bit difficult. First of all, we are in two different countries with two different currencies. We know that cocoa is sold on the world market price against the dollar, right? So if you are talking about what goes to your farmers, none of these two countries pay the farm gate price in dollar to the farmer. They will do the calculation in dollars, and after that, they'll do the conversion in their own local currency. And we know there are three currencies at play right now, where the franc, the CFA franc for Ivory Coast, Ghana is using cedi, all of them pegged against the cedi, and the exchange rate isn't the same. So sometimes it is always difficult to actually have a common price, because you're looking at the dollar. Maybe there might be a discussion around which currency you should use in terms of setting the farm gate price, but if it is set in terms of pegged against the dollar, the conversion will definitely create a difference between what Ghana possibly will be giving to farmers and what Ivory Coast will be giving to their farmers. And usually it is when prices begin to go down on the global market that we see some of these collaborations, right? Because if prices are up, that is when you see that Ghana will be charging differently, Ivory Coast will be charging. Everybody's trying to take advantage of the market. But when you have prices, fall on the international market, that's where you see these two countries come together and say, well, let's harmonize our prices. But when prices begin to go up again, that is when Ivory Coast will realize that, well, together we account for about 60%. But Charlie, if you do the math, I'm worth about 45%. Ghana, you're worth about just 15%. So that is when the differentials begin to emerge again. This time around, we can start talking because prices are down on the international market. But the biggest test still is ahead is when prices begin to rise again, like we saw in 2024, 2025, where both countries were competing, even though they were neighbors, even though combined, they were producing around 60%. But now prices are going down. That is why they see the need to harmonize. But I bet you, when prices begin to go up again, we are likely to see some of these differentials, and especially when smuggling is, rearing its ugly head in both countries. That is when we begin to see different prices in these two countries. But for me, I think that it's simply because of the fall in the price. If we're able to continue with this harmonization, it will help the two countries. But I just pray that along the line, we don't get to realize that, well, in terms of weight, we are not equal, in terms of the 60% that you just quoted.
Yeah. So, I mean, Ivory Coast and Ghana together price the cocoa beans in dollars on the, in fact, on the international front.
Yep.
Yeah. Well, regardless of the fact that prices have dropped globally, Cocoa Board still says we're maintaining. This is good politics. I mean, for the politics of it. But is it good economics?
Well, I think the farmers weren't expecting prices to be maintained in 2026, 2027, because remember that the government, promise was that they were going to give farmers about 70% of the FOB price, which they are doing at the moment. But in terms of nominal terms, farmers were expecting a relatively higher price of about $6,000, 6,000 cedis per bag, right? Yeah. Now we know that because of the crisis that happened and then when prices fell in the international market, that did not materialize. And as a result of that, what did we see? We saw the promise not being met because around that time, prices were falling. The exchange rate situation wasn't also favorable for farmers because the cedi had appreciated by more than 40% around the time that we were setting the new farm gate price, and it became difficult for Cocoa Board or the Finance Ministry to meet that 6,000 that they were promising the farmers. Prices were around about 3,000. Now, because of the crisis and to do burden sharing, there had to be some level of, cuts, and farmers enjoyed that suffered that haircut in last year, and it brought the price to about 2,800 per bag. The expectation was that if all things go smoothly, prices to begin to rise again, and farmers were expecting maybe prices to revert to the 3,000 or the more than 3,000 they were enjoying per bag. But it looks as if the remainder of the season, or maybe even the beginning of the next season, farmers are likely, or the prices are likely to be maintained around 2,800. Most farmers are not happy because if you are doing, the computation, comparing nominal to nominal, what you see is that farmers aren't really getting, any form of increments in the last two seasons. They have rather suffered haircuts, and this time around, even though they were expecting some marginal increase in the cocoa price, government is saying that, well, let's maintain for a while. Although for us, we know because of the indicators involved, if you do the math, definitely we were expecting the worst. But I was surprised to see government, maintain the price at 2,800 per bag. But if you look at the indicators, it clearly was pointing to a reduction in terms of the farm gate price. And so that's why the news is out there that government has done its best to actually shield farmers against another blow. But for me, I think that if you do the math, the time that we set that 2,800 haircut price, and now prices have actually inched up a bit. So farmers were expecting that to reflect in the next season's farm gate price. But unfortunately, we have to settle around 2,800 per bag. Well,
Caleb, your take. Do you think this is good economics?
Well, like you said, if two countries are producing about 60% of the global supply of cocoa, it makes no sense that you're a price taker. If you're producing majority of the products, you need to be a price setter. And so that's where the coordination comes between the two countries. Kofi rightly mentioned that Cote d'Ivoire produces more than Ghana. So the coordination sometimes is dragging, especially because Ghana, too, we see ourselves as the country where our cocoa beans are what they call premium. So even though we produce less than Cote d'Ivoire, the demand for Ghana's cocoa beans also has a certain market. So sometimes the coordination between the two countries is a problem. But then again, we need the coordination, we need the harmonization, because once the two countries can decide that, okay, we're going to, set equal prices, produce certain quantities, and that is very important because the price of cocoa went up to about $10,000 last 2 years, because we're not producing enough. And basic economics, when supply is low and demand stays the same or demand is high, the price goes up. So we need that certain kind of coordination between Ghana and Cote d'Ivoire. If you want to keep the price at a certain level, the production needs to go down. It's that simple. But the market also reacts to certain things. If you are coming out to say we are going to reduce production, the markets can challenge you a bit. Because when they see that it's deliberate, they're going to hold back, they're not going to give you money again. Once you start bringing the beans out again, then they start paying you again. So understanding the financing points of things, because again, majority of the time we rely on loans or we rely on off-taker financing, where we go to the market and they give us dollars before we produce the beans. If we can cut off that leg and rely domestically within our local space, the local banks, some of the African development partners here, the African Development Bank, some of the central banks within the African economy, if we can leverage on that to ensure stable financing for the cocoa sector within Ghana and Cote d'Ivoire, that's a step in the right direction. So I think, if it comes to maintaining the price, I mean, it's fair for farmers because, when the government dropped the price the last time, it wasn't taken very well with the farmers. But then from an economic point of view, government had no option than to cut the price because it was not sustainable. And you can see the price between Cote d'Ivoire and Ghana now. Cote d'Ivoire is even lower, but then because Ivory Coast, they have a certain mechanism where almost everybody has access to the market. So where Ghana, the market is very tight. Only Cocoa Board through the LBCs can get access to the market. So I think moving forward, more coordination, we need more coordination and all of that, and then understanding, how both Ghana and then Cote d'Ivoire can work together simultaneously, especially with the production. That's the major concern now. If you manage to control production, there's going to be so much that we can do in terms of the price and the support for farmers.
Now, Michelle, remember when last year, I think the early parts of this year, when the crisis came, when prices began to actually go down, we said that if you look at what happened last season, we were of the view that both Ghana and Cote d'Ivoire gave the market too much information. Right? That's why it caused the glut. Because the two countries were, sort of trying to undercut each other with prices. So Ghana was the first to set a price, and we set our price for the season which is about to end in May, which was somewhat not usual. We usually would set the price around August. So Ghana coming in early to set a higher price, with Ivory Coast left to do the chasing in terms of the pricing. It sends some signal to the market that, there's going to be a glut this season. And for that, because of that, we saw how prices actually fell on the international market. Around the time that we were setting the FOB price, prices were hovering between 7,800 and about 8,000 per ton. It fell as low as 3,400 per ton, and we suffered for it. We know the cost to Cocoa Board about 10 billion, Ghana cedis. And we know that Cocoa Board says they've cleared a component of that debt, remaining about 6 billion to be cleared. But the most important aspect of this whole, new arrangement between Ghana and Ivory Coast, and I think that Caleb mentioned, is about how to control the volume and to actually take over information to the market. Because once the market is ahead of you in terms of information around the market, they definitely will be able to smell. Because if you're able to start production, or if you're able to start processing some of the beans in your own local space, that is when you can talk about taking advantage of the supply. Because at the moment, because most of us, the two countries, we don't really, process the majority of the beans that we produce in a certain season, we are always left with, the option of always, trying to export the cocoa to licensed buyers. But if we're able to establish factories that can process the cocoa in our own local space, process the beans for it to be able to take about 5 years or 6 years before going bad, or a very long period of time, that is when we can start talking about taking advantage of this whole new harmonization strategy. But as long as we still will go ahead to rely on export, that's going to be difficult, because I know Ivory Coast has established, through the support of the Chinese, a processing plant in Ivory Coast worth about $100 million. Ghana has also declared that we are going to process about 50% of the beans we produce in the coming season. If we're able to do this, that will be very important. I think that the reason why the previous arrangement didn't work was because we didn't have this leg of the conversation in terms of how to take advantage of the volumes we produce. Now that both countries are beginning to talk about that, I think that it is worth talking about harmonizing or price harmonization around this point in time.
Well, so I'm going to ask what the future holds for this teamwork, if I should say, between Cote d'Ivoire and Ghana. And of course, if we're able to process enough and do less of exporting the raw beans that we have, do you see us getting to the point where we don't just become price takers but offers as well?
Well, I think that it will come, but it will not come in 100%, right? Definitely there's going to be a percentage of the price that's going to be determined by international factors. And I spoke about the exchange rate situation and the currency situation because you're looking at three currencies in this whole equation. Yeah. How do we make sure? How does that settle that? Well, let's set the price in the CFA franc, or let's settle the price in the CD. If we're able to do that, that is when we can talk about, you know, being able to make sure that the prices are not so different, because the most important or the biggest worry at the moment is smuggling. Yeah. In most of the seasons, we lose on the average, we lose about 250 metric tons of our beans due to smuggling. Sometimes it goes to Ivory Coast, some goes to Togo, some goes to Nigeria, and even Cameroon. And why is because of price differentials. Once we're able to close that gap, that is when we will start talking about being price setters on the international space. But I think that it's a long conversation. Yeah. This harmonization will not warrant that. It's going to take a long time, especially it will only come after we take full control over the volume supplied and then also market information as far as this whole cocoa value chain is concerned.
But Caleb, briefly before we head on to our next story.
Well, like Kofi said, it's more about the coordination and the volumes. Because if we can take advantage of 60% of the supply on the international market and make sure that we don't release too much information as the first thing and then too much volume on the market, we can control the price. Already we have 60%, so we have so much to do with that. Again, because of sometimes Ivory Coast produces more, Ivory Coast has a more liberalized market, and Ivory Coast, other people not really licensed from the states can have access to cocoa beans. In Ghana, that's not the situation. And also with value addition, if you can get more factories on board to process the beans, grind it, make paste and all of that, that's how we can move the industry forward. I think the major thing we need to focus now on is financing. Yeah. If we don't get access to capital, which is why I think Ghana is trying to do the cocoa bonds again. We had some in the past, but how cocoa board and the restructuring of the cocoa bonds earlier had the market. So I think cocoa bonds is a way to go, especially because of the financing aspect. Once you rely on the international markets for funds, they will dictate the price for you. So I think that's where we should focus on more moving forward.
Well, let's head on to our next story, the banking sector. I mean, just about a few weeks ago, we were here talking about this when we heard the news that, the court says, look, go back, get your assets, you can go back in and work. And then there's another legal claim that, no, we're not letting you work. And now we say that, okay, GN savings and loans, you have the room, go back to work. If you're an investor seated watching this, you see a bank that lost its license 7 years ago, out of business. Yeah. A lot of things have changed in the sector. There's digital banking now. They're coming back into a market that has taken a wild turn. Yeah. If you're an investor watching, what would you make of all this story? Do you think it's something that if GN is to start working, you would want to invest? Because obviously they'll need investors at some point.
Well, GN definitely has a long way to go in terms of getting back their old groove, because they were downgraded from being a bank to savings and loans before their license was actually revoked. And remember we said here, after that ruling from the court, that it was not going to be easy for GN. There are a number of legal hurdles that will come on their way along there. When I remember Gemma asking the vice president of GN Group, and he was not having it, because he said that, well, the court has given us the go-ahead, we're going to go ahead with operation, we are going to start. But we knew that some of these legal hurdles will come. And one of them was, we said that there were options if really we want to actually cross all the T's and dot all our I's in terms of this whole journey as far as GN Bank is concerned. It was that one way was that the receiver could apply for a stay of execution or go to the Supreme Court again to review the decision that was taken, right? Now we know that the Bank of Ghana has filed at the Supreme Court. There's also a stay of execution, which at the moment we know that the Court of Appeal says that, well, we've quashed it. let GM Bank go ahead. Receiver, you have no role now. What we are directing is that hand over everything to GN Bank.
Yeah.
That alone should tell you, if you're an investor, that GN has a long way to go. But I like their resilience. Their resilience is that they will start very soon, and I know they're going to start from where they started building, which is Elmina. Why Elmina is important is because that is where Papa Kwesi Ndom is concerned. And I remember the time when we were having a conversation about this, and we said that, well, Papa Kwesi Ndom, possibly it's time for him to step aside. And I made the point that, well, he can't step aside because in terms of rebuilding, whether the bank or the savings and loan, without his profile, without his image, it's going to be difficult. And for the bank to also, the savings and loans, to say that we're going to start from Elmina, that's to paint the picture to you that they know the difficulties. They can't just start from Accra. They can't just start from Kumasi. They need to start from Elmina, regain the trust, and after that, do the transpose to maybe Accra or Kumasi or national. But definitely, some of this news, if you're an investor, to tell you that it's not going to be easy for GN. But I think that the most important thing is that GN has a lot of backing at the moment, and I made a point some time ago that the market or the customers see Papa Kwesi Ndom as an individual who, quote, wasn't treated well. And so that is why, for me, I think that he leading the rebuilding is very important. I think that that alone will be some sort of, stepping stone for GN in their rebuild. But definitely, it is not going to be easy. This possibly will not be the last legal battle. I expect more to come soon.
Well, still standing on the issue of confidence, just like Kofi said, this will not be the end of it. We're still going to see more. If you're an ordinary Ghanaian and you have so much love for the personality that stands, in the midst of all of these, do you think that you would want to put your money in there if operations is to start?
Well, I think, I'm a bit biased because, some of the prudential breaches that GN Bank, were alleged to have taken place was not subject to the court case. The BOG had a long list of, breaches that the alleged GN Bank, had committed. And if you go on the ground, the reality is some investors, some people that had money in GN Bank could not access their money. Some people went to the branches to deposit money or receive money from someone, they were turned away. Those who are receiving salaries from the bank also could not access the full amount. They have to take it in tranches. So I think this is still real on the ground. If you speak to some people, some former staff, some former customers of the bank, they went through this. Now, Kofi mentioned that some of them understood that maybe there were some political undertones to it, so they might let it go. But then regaining the trust of or the confidence of the market is a long way. And already we've heard from the BOG that they are appealing the decision. So in the short term, we should expect some battles to still happen, even though right now GM has the way to go to resume operations because the court of appeal ruling still stands. The receiver went to court, they were turned away, so which means that GM Bank has access or should have access to their property and start operations again. So in the short term, they have the leeway to resume operation. But then the BOG is still going to appeal the decision. So I think for anyone watching, they're going to be very cautious, wait for the BOG's decision or the Supreme Court decision based on the BOG's appeal. After the Supreme Court rules, that's where we can say, okay, some level of confidence has come. But then once there's already the Supreme Court ruling lingering somewhere in the background, I don't think full confidence will be back in the market.
Well, viewers, this has been our analysis.
That GN has won the Supreme Court's case before.
Oh, yeah, But this is our analysis on these two big stories. But of course, imagine if you get to buy a liter of petrol at around 10 Ghana cedis.
Oh, that'd be good.
How cool would that be?
Yeah, that would be we've been there before, right? We're even single digits.
Yeah.
I want to feel that again.
or maybe even less. But anyway, we've seen that reality before. But from the way things are going, government has scrapped that 1 cedi levy of fuel, and NP has also come down with the price floor as well. Do you think that this could be an item on our wish list, or is a reality we can live? Well, that's the story on Big Analysis. You want to stay with us. Winston, Kofi, and Caleb will bring you that analysis shortly.
Indeed, even before the Iran-US deal had come into full effect, international benchmarks, which is oil prices, had shown signs of decline. Per this, I'm talking of flat prices, which has to do with the benchmark for finished products. you had seen some significant declines in those numbers. So now that you have a deal that has been tentatively agreed between the two warring sides, the expectation is that prices may even decline further in the coming days, except to say that just today you have Israel go back to Lebanon to, as it were, continue its own aggression, as you would want to put it. Whatever Iran chooses to do, I suspect that that would simply be between Israel and the Iranian authorities. I do not expect that Iran would abandon the current, deal and go back to close the Strait of Hormuz, which is the choke point that has led all of us to the higher oil prices that we've seen in the past weeks or months. So, give or take, I expect that fuel prices would not only be stable, but would be fairly sustained as far as reductions are concerned for Ghanaians. Again, do not also forget that just a week ago, Monday, about 8 days now, was when we all met to welcome Central Refinery that had taken Jubilee crude for refining. I also am made to know that, of course, Tor already has some crude that it took delivery of earlier, but in July, Tor should also get a parcel of crude from the Jubilee part. If you put these things together, Pius, there's every indication that fuel pricing for Ghanaians beyond this pricing window might even go down.
Of course, we're still here on Ghana's leading business analysis show, Beyond the Numbers, on Joy News. And on Big Analysis this afternoon, we start with something you've probably noticed if you fill your tank this week. Well, fuel is actually cheaper. Goil, Star Oil, and others have dropped petrol to around 13 cedis, 85 pesos a litre, the biggest cuts we've seen in months. And here's a surprising part. The drop happened even after government scrapped the last of its diesel relief. So prices fell when many of us expected them to climb. Now everyone is asking the same thing. Is this just a brief window, or are we heading somewhere we haven't been in a long time? Could we actually see fuel at 10 Ghana cedis? Well, we break it down and look at what's really driving these prices. Is it the global oil markets, the city, and the taxes backed into every litre you buy? And whether that 10 Ghana cedi figure is realistic or just a wishful thinking. Well, we're joined by the CEO of CBOC, Dr. Patrick. He joins us via Zoom. Hello, good afternoon, sir, and thank you for joining us.
Good afternoon, and good afternoon to your viewers.
Well, it's good to have you here. But first of all, how have we come down from 15 to 13 Ghana cedis per litre?
Well, I will always love to use such an opportunity to remind Ghanaians how our petroleum pricing is transparent and based on a strong ethical foundation, and we all commend the regulator and individuals who have pushed for the sector to be fully, to be more or less partially deregulated. So we are able to pass on the required gains from the international market to consumers as and when it happens. Yes, it is not surprising in the sense that you check crude oil prices as of January was around $61, let's say $62. Yeah. As at May, it went up to $129. That was about 110% increase in that. You look at June, as at the close of June, crude oil price had gone down to $97. That is also an indication of a 25% fall from the May pricing. And as a close of trading yesterday, crude oil has fallen down again to about almost $82. That is an indication of 16% drop in pricing. You use that to look at it from the refined product, as my colleague who spoke mentioned. In the same analysis, you look at January. Petrol, for instance, we're landing petrol at Platt at $620 per metric ton, whereas in May, it was $1,044 per metric ton. That was 68% increase. You look at June ending, it came down to $988 per metric ton. That was a sharp, a low 5% decline that you started seeing at the pumps. And as a close of trading yesterday, refined product petrol closed the day at $925 per metric ton. That is a further 6% down. So as the trend continues like it gives you a clear indication that this is how it is going to happen within the market. But for us to speak on, let's say, diesel, for instance, diesel has also gone through the run and in the sense that diesel increased from January to May. It was about 125% increase. That was how come we all saw the government intervention that was targeting diesel. You look at the end of June, diesel has price has reduced 24%, and as a close of day yesterday, it has also gone down 16%. That we hope to be able to reflect that. But on the other side of the supply side is that with recent attack of Ukrainian drones hitting Russian refineries, you check the supply map and the Russian export of refined products into the market, it has really gone down to about 25%. So you check previously if Russia was supposed to bring, let's say, 100 to the market. As at the end of June, they were able to supply the market only 25%. And we hope that in the coming month, they can also step up production by fixing the refineries and then add that. And with the gains that we are having from the peace pact, we can see that it will continue. But to your main question, that for fuel price to hit 10 cities or below 10 cities, then we need to look at an international prices situation whereby for petrol, prices has to be as low as $650 per metric ton. With that and an exchange rate of, let's say, 10.9, in that case, 10.9 to the dollar, in that case, we can hit the realm and have a pump price below 9.9 thereabout.
That's single digits. Well, Doc, let's look at the war in the Middle East and how that may have affected our inventories. The last time you were on the show, we spoke about the reserves that we had when we're all not certain about where the prices could go in the following, months or weeks. Now we've seen some level of clarity in terms of, the peace pact. We are seeing prices come down. And I want to ask, in the periods where prices were very unstable and we saw prices go above $100 per barrel, how did it really affect the 7 weeks, 6 weeks, reserves that we had, that we said that, well, based on this, we shouldn't panic, we'll be all right?
Well, irrespective of how you see it, the good thing about our downstream market is that it's hugely diversified. And then also there is value proposition and an intense competition among the BDCs, the private sector, and even the BDCs, which in the private sector, and then government entities like BOST. And now we've seen Tor, Centio producing. So there is always positive about having a very competitive market and a very diverse supply sources. So as you could see, most of our partners were picking products from Dangote, the Glencores and the Vitol that supply crude to Dangote. They were able to pick some of the refined product and supply it to us. In addition, we also had some of our members who had strong links within the Arabian or the Gulf region that they were also bringing product from there. that somehow ensured that product availability or supply was never in question.
Yeah.
And that's something that you give credit to the deregulation of the sector, because people tend to respect their respective contracts with their IOTCs. And then also, even if they are picking from a local refinery, they have the required cash flow to be able to supply, pay for products on time and ensure that the required logistics are in place to move or evacuate those products. So that clearly was what was happening. That situation has not changed, irrespective of the war situation. The only thing that really impacted, and as I've given you the percentage increase and the decrease, you could clearly see what's coming from the international price, that impact on that. Like we always say, supply will never be an issue, but the price is what we cannot guarantee where it is going, since we all find ourselves in a two major uncertain variables that predominantly determine the prices that we pay at the pump, which are the global price and then the exchange rate.
Doc, let's also look at the Russia bit of the equation, where we know how important Russia is. We saw how they ramp up production and supply when prices went up. Now prices are beginning to go down. Do you have a feeling? Do you feel that Russia could actually scale back and say that, well, prices are beginning to go down, I'm going to scale back? And how does that affect the market? You made mention of that. How is that important, and how is that, our inability to get what we used to get from Russia about a month ago or 2 months ago? How is that going to affect the market?
Well, definitely, once you have the market being flooded with products, it drives prices down further. But with the Russian stream going that down, clearly gives an indication that prices could have even fall further down coming the subsequent days or weekend.
Okay.
And it's going to take them some time to fix most of these refineries to bring them on stream. Don't also forget that while the war was going on, all analysts globally were scared, in the sense that if it had continued into the month of July, supply situation would have been very tight for the global economies to have access to product, because most of the products that came to market from May ending June were all products that were coming from storage, or products that were in more or less buffer. So people have depleted all these buffer, and there is also the need for them to replenish all those stocks that they pump into the market in order to keep their national reserves at a certain level, or be it even individual companies to be able to meet their obligations that they have elsewhere. So that has also somehow retarded the extent of decline that we were anticipating, that with the announcement of the peace pact, it could have impacted on the market. So these are the two main reasons. But if Russians are able to scale up, clearly then we can still continue to sing hallelujah, hoping that the prices will drop further.
So maybe finally from me, how soon or how quickly can we get to maybe 10 cedis or single digits from where we are at the moment?
Like I said, if the managers of our economy are able to sustain the gain that the currency is making, and the currency is able to go below sub-11, in that case, there is a huge potential that when prices even drop to $650 per metric ton, we can hit there. If the currency remains around 11.2, as we are currently seeing, then in that case, we need international prices to fall below $550 per metric ton to be able to arrive at that single digit numbers.
All right. Thank you, Doc, for joining us.
Thank you.
Thank you. But Caleb, well, you have looked into the numbers, you have the data. You want to take us to the trend of how the prices have been dancing around since...
Yes, so we know that earlier this year, we reached about 9 cedis. That's where I think February-ish, we're doing 99 pesos for petrol and close to 11 cedis for diesel. That was the lowest we've seen in a while. And I was telling a few colleagues that if I had enough money, I would have bought a tanker and kept it. Because when you were if you are monitoring the tensions in the Middle East, some people saw that there were some disruptions about to happen, particularly when Trump took the Venezuelan president hostage, and the U.S. went there to ramp up oil production. We could see that the U.S. was trying to prevent a shortage. But then once you attack Iran, a major player like Iran, and then they have access to the Strait of Hormuz, you know that some disruptions might be fatal, which is why we are seeing some respite after the announcement of the peace deal. They're supposed to sign the peace deal on Friday. If that happens, we should see crude oil prices falling further. Now, this morning I checked, the price is now $79.
Oh, wow, what a tumble.
Yeah.
$79 per barrel. This is major. But then we're doing earlier in January about $55 to about $60 per barrel. So this means there's still about $20 per barrel in risk premiums, which means that the market is still not fully assured that there's going to actually be a peace deal, even though we've seen a drop from the hundreds to now 79. That's a good thing. Now, when we spoke about this matter the last time, I was mentioning that even if the strait is opened, it might take some time for passage to actually flow through, because some infrastructure within the countries there, Qatar, Kuwait, and others, were hit during the conflict, so they're not currently producing at capacity. Again, Iranians said they leave some mines within the stretch. Some reports said the Iranians they don't even know where the mines are. So it's going to take some time for them to take out the mines and ensure safe passage through the straits. And again, some ship owners who ordinarily would have passed through the straits, they've rerouted their ships. So some are in the European countries, some are in Africa. So it will take some time again for them to reroute their ships and go back to the Middle East through the straits again. But then, looking at the contents of the peace deal, some contents have come out so far, and then one of the major things there is that the sanctions on Iran has been lifted. So now Iran can sell their crude oil on the markets without sanctions.
That's what they wanted.
So this is major. Yeah. This means that even though there's going to be some shortfall because the Straits is not going to be fully operational, Iran can supply the markets, which is major. Again, the U.S. is supposed to give Iran some access to about $300 billion in some repair damages and all of that. Once that happens, Iran can start producing at capacity, and then the market is going to be flooded in a sense, and the price will come down a bit further. So looking forward, we might see the price keep going down. Now, the second major thing is the currency, the value of the currency. Yeah. And Dr. Afuri spoke about that. We saw the currency dancing a bit from about 10 cedis, 90 pesos, it went to almost 12 cedis. Now we are doing 11 cedis, 50 pesos, 11 cedis, 20 pesos. If it stays the way it is, like Dr. Afuri said, we are not going to reach single digits anytime soon, but then we are still going to come down because the city is now doing well. From 11.9, we are not doing 11.2, 11.5. And in fact, the last window, the city appreciation was not factored in because the city appreciation, there was a very steep jump at the end of last week. That was after the pricing window. So from the 10.9 to about 10.5 and now 10.2, it's not factored into this. So even if things stay the way they are, or hopefully the peace deal goes through, they're going to see further cuts in the next pricing window, which is something that we are looking forward to.
Well, if you really want to keep fuel prices down, if you want to get back to 10 cedis very quickly, I've made a point that usually, and this is not, to say cast in stone, but usually the price per liter at the pumps is always equivalent, not equal, but equivalent to the exchange rate of the dollar to the cedi.
Yeah.
So when you see a very stable currency, there is that high likelihood that fuel prices are also going to go down. And remember that when this whole war started, we said that we were not, at the first 2 weeks, we were not really feeling the pinch because the currency around that time was very stable.
Yeah.
That was really holding the kind of uncertainty we were seeing on the international, market. Now, we all saw how BOG came in to say they were going to inject 1.2 billion. Yeah. That in itself has brought a currency which almost reached more than 12 cedis to the dollar. Now to about 11 cedis, and many are saying that it could get to the regions of the 10s very soon. And when that happens, and I agree with Dr. Patrick Ofori says that, well, if we're able to get the city to be in the 10 zone and the crude oil price to be about $60 per barrel, we are likely to hit 10 cedis per liter. Yeah. And that is not magic. That is the stochastic process, the calculus around this whole, fuel pricing. But another thing we also need to be careful about is what is going to happen on the international market, because availability is also important. Yeah. Although we've spoken about how now we could get about 45% or close about 40% of what we consume produced locally, which is very, very good. There is also another angle of this whole analysis about whether companies will decide to make the refined crude available, or they'll go in the direction of restocking their inventories. Because remember, when this war started, and I think the last time Caleb was talking about how the world's stockpile had diminished. Yeah. Why? Because we needed that. Now prices are going to go down. How will companies decide to restock their inventories or make the crude available on the market? Yeah. That is also another angle that we need to take a look at, because the uncertainties we are talking about is not only coming from the fact that the war has been very erratic. Yeah. The whole agreement process about the war, the kind of people involved. Donald Trump currently is chilling with the World Cup, so he's not so bothered about certain things. He said, well, Iran, they can play, right? Right now, he's at G7 getting accolades about how the World Cup has been organized. We have Trump's attention, a part of his attention on the World Cup, which will possibly end very soon anyway, I should say. After it ends, what is going to be the attention of Trump? What is he going to focus the attention on? Is it going to be back on trade? Is it going to be back on the war again? Especially looking at the fact that Iran is saying that we need over $300 billion in terms of the damages done. Yeah. They are really stressing on that, and they want that money. They don't just want the ban lit that they can sell on the internet. They want that anyway. But in terms of the damages, they also want some form of, monies from the U.S., which J.D. Vance spoke about it, this week in a media interview, saying that, well, he knows that they're going to stress on that. But I think that now we have Donald Trump's attention on the World Cup, so we sort of like have some breathing space. But after the World Cup, what will be, what will Donald Trump focus his attention on? Is it going to be on trade? Is it going to be back on the war again? And will Iran stay with this new agreement? Will they flout it? I simply do not know. If they do, currently we have a very low price, close to about $79 per barrel. Are companies going to, or stakeholders in the industry going to focus on restocking inventories or making those crude available? All of these things are that I think that we need to connect. But for us locally, for us to quickly get to the 10-city zone, we first of all need to get the city or the dollar to about 10 city, 25 pesos, or in the 10-city zone. And possibly hope that, that's possible with the, I want to say drift lord, but that's very possible. That is our sovereign decision. But in terms of one other indicator that we cannot really control is what happens on the international market. But we know that once we're able to get to about the 70s or 65, and we're able to keep the city very stable, trust me, we will enjoy, especially when Central has taken 1 million barrels, and then we also have, talk going ahead with that. That for me is very important, and maybe very soon we might see some of the the uncertainties we have about fuel, going away, and we possibly will have stability at the pumps maybe very soon. Well,
let's talk about the levy on fuel that was scrapped. When it was introduced, a lot of, in fact, everybody was screaming that this was causing the fuel prices at the pumps to go up more than they thought it would. Now, looking at the fact that even if government decided to still hold that 1 city levy, we're still seeing a cut, however, because of what's happening in the Middle East anyway. So my question is it that government is seeing some sort of relief? The reason they decided, okay, let's take this 1 city levy off, and there's a projection that even if anything happens, because we still have some uncertainties anyway, even if anything does happen, we're still in some comfortable lead to still hold on to the amount that we have.
Okay, so I think the good thing is that with the cushion that the government introduced, the petrol, I think about 36 pesos for diesel initially was 2 cities, and it dropped to now, I think 1 city, 7 pesos, and now government has taken it off. Now, when they introduced that cushion, the government was able to do that because within the space, the cushion was coming from the SOEs within the sector, not from government revenues. So government has some leeway to play with that. But then when we made this projection that if it was going to go on for more than 2 months, the SOEs within the sector were going to struggle a bit, because that's how they get their revenue, that's how they fund their operations. And in fact, most of the OMCs had to pre-finance their transportation of diesel across the country. So once the OMCs are pre-financing, they're always scared about their cash flow, because if NPA does not reimburse them later, they might have problem paying taxes, they might have problem paying for their new deliveries to stock up again. So all of these things have to be factored into the whole conversation. And I think 1 month was enough for the the sector to kind of settle in, and then for the the industry to now take a step back and then assess the situation. Now the next leg is that after the government has taken off the cushion, prices on international markets are coming down, which is why the government now can fully take it off. In fact, if the government did not take off the price on diesel, I think we shall see diesel go to about 14 cedis. But then diesel dropped. That's why diesel dropped marginally from about 15.7 or so to now it's still around that level, which is why the whole diesel price is still a bit elevated because the government took out that 1 cedi cushion. But moving forward, the whole thing is now about the international space. We do not have control over that. What we do have control over is production locally. And Kofi mentioned how TOR and CENTO are being leveraged upon. Because even though Dangote is nearby, Dangote is still charging international prices. Even though TOR is within the country, when they are buying their crude, they are still buying crude at international prices. So the whole focus now is not really about availability, like Dr. Alfori said. It's about the price on international markets. And we've seen the drop from over $100 to now, we are now doing about $79 per barrel. This is good news, but this is still very elevated. And if it stays at $79, you're not going to see the 10 cedis or 9 cedis petrol anytime soon. Because when we saw the 9 cedi petrol, prices were about $55 per barrel. That's very low compared to last year and the last 2 years. So I think how the international markets plays out, and Kofi rightly mentioned, most of the inventories that we're relying on, they've been drawn on. If you go to Shell, most of the major oil trading enterprises, they've drawn down on their inventories. And the projection was by July ending would have been done, and then oil prices might have reached $200 per barrel. That was a scary situation. I'm sure this is why the US is pushing very hard for this deal. The Israelis are against the deal, but they don't like certain.
The US is actually feeling the pinch because right after Trump spoke about the new deal, we saw how price at the pumps fell below $4. In the US,
which is very high for them.
Exactly, it's very high for them. If he had continued to July and it was still stalemate, we definitely would have seen the pump price in the US go to about $6 per.
And there's a midterm election coming up.
Exactly, and that would be very. I mean, politically, it doesn't look so good. And when the US begin to feel the pinch domestically, they will do everything within their power to make sure that a peace deal possibly is reached. But we also need to put across that all taxes on the export price of fuel remain fixed. They are still there.
Still
the only thing that has been scrapped is the relief, right? All the taxes are there. The ones, the additional levy is still there. You've got the
road fund levy.
Everything is still on.
All the margins are still there.
Are there?
Cost margin.
Are there? And there are those who are saying that if you want us to get to the 10s and the 9s quickly, take away the 1 cedi additional export price.
It's not going anywhere soon.
That's very difficult.
So now, guys, before we go, I'm just sitting and thinking about the OMCs. Where we were doing
about Black Stars.
No, but where we're doing about 10 cities, some were saying let's do less than that and all of that. So I'm wondering if we're able to get to that point. I'm wondering how, the kind of arguments that will come up anyway. But before we go, what's your prediction? Ghana,
1-0.
Panama?
1-0.
Against
Panama.
Okay.
I don't have a prediction, unfortunately. I don't trust the Black Stars.
Wow.
So let's wait and see.
Okay, well, Winston and I think a 2-1 against Panama will do.
2-1?
Yeah, it's Winston and I, so 2
okay.
against Panama. But thank you so much for doing the watching. This has been Beyond the Numbers. And coming up next is...
The Pulse with Kenneth Jesse.